morning, it's Jonathan Barrett with the morning debrief. Obviously it's Friday and I've been out and about, but certainly a lot of excitement out there in the markets. So it's July the 29th, last trading day for the month, and of course it's 7:31. Well, I guess where are we with what's happening? I guess it all hinges on what's happening in the US. Republicans, Democrats, arguments, leverage, a whole lot of a mixed bag. But at the end of the day, I think the selfishness of what's occurring here is remarkable. People vying for leverage to get a deal through so they can get their own bills passed. I think that is interesting. It is being played out in the markets because the markets are nervous. I do feel the market will come up with a resolution, or the sort of Democrats and Republicans will come up with a resolution. As the consequences, as we've seen from an open letter from the Banking Committee, basically suggest that, look, it'll hurt a lot of people. And I think that is true. So I really sort of look at this as it's just a lot of politicking that really is not going to go anywhere, and if anything, if they don't do it, create more concerns. It is the way Congress does. We work to the 11th hour, so we are anticipating something will happen. What trades do we look on if, in fact, this sort of thing does occur? Where do we go for the best opportunities when we look at that? When we know that the US dollar now is up a little bit, we know that gold's certainly better bid. We know oil is flat. So what sort of trading opportunities do we see once they pass it? And in my mind, it does represent some opportunities, because some of these commodities and currencies are at levels where they shouldn't really be, and they're being buoyed there purely as a result of the concerns, the geopolitical concerns on the debt situation that we have in the States. So if once you take that out of the market, it's going to be quite interesting to see where some of these markets will trade. I think the first one is that we think equities will go up. The other one is gold will go down. And how will that affect the Aussie dollar, which is on record highs? If there is flight towards the US dollar, away from the US dollar, is this a signal that we should move to the US dollar? So, I mean, there's lots of things. I mean, at the moment when I'm looking at it, I think that they will pass, so the opportunity there is in the equity markets. I also think that if gold sort of nudges through that 1600 quite quickly, then it's an area where you could probably have a look at selling. And the Aussie dollar, a little bit different, because I think our economy is in a better place. So Aussie in itself might just be a little bit better bid than others for some time, but we'll see what stories start to happen in China as to how that will affect the Aussie, because I think the Aussie is certainly gaining some good safe haven status at the moment. Okay, so let's dive into the markets. Let's have a look at what's actually happened, and we'll try and idle out some areas of opportunity. Okay, I guess the first, a little bit of an overview. And Dow Jones down 62, S&P down 4, Nasdaq was down 1.46. Over to Europe, top 50 pretty steady, FTSE up 16, CAC was down 21, and the DAX was down at 62. Close to home, our local market was down 4,427. So I guess equity markets, once again, just marking time. How are the general commodity markets working and the currency? As you can see, Aussie dollar had a good move last night, steady around that 110. I think we have to be cautious about what happens. There'll be a knee-jerk reaction given what will happen out of the government, and that might see a dollar buy for some reason. When you look at some of the other ones, dollar yen, we've got a very small trade on there. It's at 77.65, and we've had it on for some time, but as you can see, it's just been a pretty lethargic move for that yen to firm. The euro, 143.30, and when you look at what's happened there, a bit of a bounce, strength to the euro, maybe dollar weakness comes as a result of a solution, but obviously you can see people have been going to dollars as a result of what's happening there. Looking at gold, well, this is the little baby there. That sort of doesn't tell us yet that there's a high. That low there and that bounce does suggest that there's perhaps more in it. Because of that volatility, we're basically standing aside the gold market. Same with silver. I really don't want to be involved in a market which I know is probably placed quite volatile to the top side. But keep an eye on 1600 there. A break there could signal a bit of a trend. Crude oil, look, we tweeted crude oil as a bit of a sell there. still like that. It's failed to move too much higher. It has been mixed by some economic data out of the States, and we'll run through some of that data as well because obviously quite important. But crude, looking in my mind a little bit softer. If it takes out the 96.50, then we just head down to this area again. Copper, very steady. Remember, we still got that mine issue and labour concerns, and those labour concerns are keeping the price of copper very well bid at the moment. So it is just mainly that. It's just a dispute that's keeping things pretty cool there. Okay, looking at just quickly have a look at wheat, very steady, 694. We've been here for a while. Similar stories there with corn and soya, so not much there. We failed to move up to the top side here, so I think a lot of people are saying, well, we test back down here again. So nothing too crazy there. Okay, so that's really about that on that front. I guess when we look at some of the economic data out, we did have continuing jobless claims in the States, and that was a reasonable number, 3.7. Initial jobless claims up 398. They were expecting 412. Pending home sales, now this is a good number. The consensus was a down 1%, and we came in up 2.4, so quite happy on that front. Today, and we've got a little bit of data in Australia, private sector credit, and vehicle production in Japan, Germany retail sales, and I guess in the States we've got all the GDP data. That's coming up now. You can see here a lot of the GDP data out there, and that'll obviously be widely watched. But I think if anything there, what you're going to look at there is more focus on what's happening in the Congress rather than what the numbers are. So I think that'll play second fiddle to what's happening. Also, Chicago Purchasers Managers Index, as you can see there, are quite important. Okay, now as I mentioned at the beginning, what sort of trades would we actually look at? I guess if we were wanting to trade on what was occurring. Just have a look at the SPY here, and I suppose if anything there, you're right on lows here, double bottom. The safest trade is to buy on a break through 4456. Okay, so if it breaks through 44665, that confirms this range, and that confirms that we've got potential to head back up to this area again. So in my mind, that's the easiest trade to look at in equities because we get this sense of relief going through. Another trade to look at would be for gold, and it'll be on a break through that 1600. Now, as you can see, we're looking at the breakthrough areas. It's going to be volatile, so just be careful. But if you do happen to sell it on a break through 1600, then your stop goes in above that 1630, so quite wide. So those sorts of things you've got to look at. Okay. Let's have a quick look at the dollar index. 74.28 is where that is at the moment, and as you can see, it's coming back a little bit. That could be a little bit of a low for the dollar at the moment, but we've bounced up quite nicely. I think the key here is that there's a safe haven play that the dollar is looking at, and I think when we look at that safe haven play to me is probably correct, particularly when you look at the yields on the long bond in the States. So more people will park their money in these things, I think, regardless of what happens, because it is a safer currency. Okay, so expect a knee-jerk reaction. So I guess if anything, that's pretty much about it from me. There's a few ideas on what we think are some good trades, you know, but it's all going to rest with what happens in Congress. So we're just going to have to be vigilant. Sometimes it's right not to trade before big events like this, rather than keep an eye on those breaking areas. So then we've got 3 to 4 days worth of trend after it. So I'd be more inclined just to perhaps hold back and then wait. But if you want to have a go at it, then obviously that gold I think is probably a bit of a standout, and also the equity markets there, something to look at. But remember, I think buying the break is probably the easiest thing because we're now confirming there's a trend in place. Well, that's it from me. Have a great weekend. Good luck tonight. Should be fun, and we'll certainly talk to you later. Bye for now.